question in which we will prepare the current account as well as the capital account. Why? Because this question has stated that the capital will remain fixed. You can see very carefully that the question has given on 1st of April 2019, X, Y and Z had a capital balance of 3 lakh, 2,50,000 and 2 lakh. And they decided to keep their capital fixed. Whenever this word keep their capital fixed is given, that means we have to prepare the current account as well. Till now, we were talking about fluctuating capital system in which we were only preparing the profit and loss appropriation account and the partner's capital account. In this sum, apart from preparing these two accounts, we also have to prepare a separate account called the current account where we'll transfer all the entries which will be done in the profit and loss appropriation account. So let us see what the question has said. On 1st of July 2019, X, Y and Z further invested 50,000 and 1 lakh. So when they have invested 50,000 and 1 lakh for the capital, what actually means is that now their capitals will actually become 3 lakh. Everybody's capital is now 3 lakh. Now, the partners have withdrawn money in the following manner. You can see all the three partners has withdrawn money, and how they have withdrawn money is given over here. X has withdrawn 20,000 on 1st of July 2019 and 20,000 on 1st of January 2020. Y has withdrawn 4,000 per month at the end of every month, and Z has withdrawn 10,000 at the end of every quarter. The deed has provided interest on capital at 8%, interest on drawing at 12%. Salary is paid to one of the partners, that is Y, 1,500 rupees per month. Profit for the year is given as 1,01,160, and we are preparing the required account. So whenever this word required accounts have been said, we have to understand what are the things which we need to prepare. Number 1, profit and loss appropriation account. Number 2, partner's capital account, and number 3, the current account. But before doing all this, the first step is to calculate. And what are the two things we have to calculate? We have to calculate the interest on capital at 8% and interest on drawing at 12%. We'll start with the calculation of interest on capital at 8%. So first partner we have X. The investment is 3 lakh. And there is no further investment, so 24,000 is the interest on capital. Y, we have 2,50,000. See very carefully, for full year, and then we have 50,000 for 9 months. Okay, or we can also calculate in this way: 2,50,000 for 3 months and then 3 lakh for 9 months. These are two ways of calculating it. We will get the same interest, but let us see what we will do. We will calculate in the first method, okay, where we will have 2,50,000 for the full year at 8%. So if you calculate that, how much are you getting? You are getting 20,000 plus 50,000 8 by 100 into 9 by 12. I hope it's very clear to you. 50,000 for the capital on 1st of July. So 1st of July to 31st of March is 9 months. Let us calculate this and see what we are having over here. Cancelling the zeros over here. So you can see over here, we have over here 2 and 3. We are cancelling this and this. We are getting a 3 over here. So 500 into 2 gives us 1,000 into 3 gives us 3,000. So this becomes 23,000. So the interest on capital for the first partner X is 24,000. The interest on capital for the second partner Y is 23,000. And let us see what is the interest on capital of Z. Z over here you can see 2 lakh for the whole year. That gives you 16,000 plus we have 1 lakh to 8 by 100 to 9 by 12. Okay, for 9 months. Let us cancel these two. Now we have over here 2 and 3. Cancelling this, we are getting 3 over here. So we have over here 6,000. So 6,000 plus 16,000 gives us a figure of 22,000. So now we have got this information that the interest on capital of the first partner is 24,000, interest on capital of the second partner is 23,000, and interest on capital of the third partner is 22,000. So these are the three figures which have to be kept in mind: 24, 23 and 22. Now we move on to calculation of interest on drawing. You can see over here all the three partners have made the drawings, and interest on drawing is to be calculated 12%. First we'll calculate for X. Please see, 20,000, 12 by 100 into 9 by 12. Why? Because see, it has been drawn on 1st of July 2019. Let us cancel the 12 first. Let us cancel the zeros. So how much we end up with? 1800. Plus we have 20,000 plus we have 20,000 into 12 by 100 into 3 by 12. I am sure you are getting that calculation. You are understanding why 3 by 12, because it was drawn on 1st of January 2020. 1st of January 2020 to 31st of March 2020 will obviously be 3 months. So again, let us cancel these two 12s. Let us cancel the zeros. We end up getting a 600. So if we do the totaling of that, we get 2,400. That is for X. Now let us calculate for Y. Y, you can see 4,000 per month at the end of every month. That means the time which will take is 5.5 months. If you remember the formula, that is time left of the first drawing and the time left of the last drawing, taking that into consideration, we will calculate for 5.5 months. Now let us see how much. The total drawing has been 48,000. What is the percentage? It is 12%. What is the time? 5.5 months, because it is drawn at the end of every month. Okay, so end of every month would mean 5.5 or 5.5 months. So let us cancel the zeros for 12 first, then the zeros, and if we have 480 into 5.5, that will give us 2,640. Repeat again, if we have 480 into 5.5, that will give us 2,640. Now we have Z, the last partner, 10,000 at the end of quarter. Okay, at the end of every quarter. So there are 4 quarters. Total drawings is 40,000. Please see very carefully. Total drawings is 40,000. The rate of interest is 12%. And if it is drawn at the end of every quarter, 4.5 months interest will be taken into consideration. Okay, and now let us cancel. And we are left with 400 into 4.5, which gives us a value of 1800. So after doing the calculations of interest on capital and interest on drawing, we have come to the conclusion that the interest on capital of the three partners, that is X 24,000, Y 23,000 and Z 22,000, and interest on drawing of the three partners X 2,400, Y 2,640 and Z 1,800. These figures will be posted in the profit and loss appropriation account with one more figure which has been given to us, and the salary has been paid to Y at 1,500 per month. That means 18,000 throughout the year, and we have been given a profit of 1,01,160. So these are the items which will be posted in the profit and loss appropriation account, and we'll see how much profit the partners will get. If you see very carefully, nothing has been mentioned about the profit sharing ratio. So if nothing has been mentioned about the profit sharing ratio, the profit will be distributed equally among all the partners. So let us prepare the profit and loss appropriation account and see what is the profit and how it will be distributed among the partners. So we'll now prepare the profit and loss appropriation account with the given figures and the calculations which we have done. We remember, we have seen the question and we have found out that the profit was given to us as 1,01,160. So that will be the first entry which will be there in the credit side of the profit and loss appropriation account. So let us start with it. The first entry is by profit and loss account, net profit transfer. What was the figure? 1 lakh. 1,160. Now let us come to the debit side. We start with 2 interest on capital account, 3 partners X, Y and Z. If you remember, 24,000 X, 23,000 Y and 22,000 Z. If you do the totaling, it will come to 69,000 for the 3 partners. Repeat again, 24,000 to X, 23,000 to Y and 22,000 to Z. That gives us 69,000 as the interest on capital. Now we also have a salary given to one of the partners, that is Y, and he has given a monthly salary of 1,500. That means a total salary of 18,000. 1,500 into 12 is 18,000. So the salary over here is 18,000. Okay, and now we'll move on to the credit side with Y interest on drawing account. We have X, Y and Z. If you remember, all the 3 partners had withdrawn money in different intervals, and we had calculated the interest on drawing for the first partner as 2,400, second partner as 2,640 and the third partner as 1,800. This was the calculation which was actually done, that is 2,400, 2,640 and 1,800. So if you add this figure, you will get the total of 6,840. Repeat again, if you add this, you are getting a figure of 6,840. Now if we add the credit side, 1,01,160 plus 6,840, we end up getting a figure of 1,08,000. That is the total. Repeat again, 1,08,000. That is the total of the credit side. So that will be the total of the debit side as well. Now we'll compare both the sides and subtract the figures which has been given to us, 1,08,000, and if you subtract it 18,000, we end up getting a 90,000 minus 61,000. So we get a profit of 21,000. So you can see there is a profit of 21,000. So to capital transfer, or we can write to profit transfer to capital account, and we have X, Y and Z. The PSR is not given, therefore it will be equal and the partners will get a profit of 7,000 each. See very carefully the entries which have been done. Interest on drawing, the total of which has come to 6,840. Interest on capital, the total of which has come to 69,000. One of the partners, Y, had received a salary of 18,000 and the profit of the year was given to in the question as 1,01,160. As a result, the total came to 1,08,000. We subtracted the credit side with the debit side and we got a profit of 21,000, and the question does not give us any profit sharing ratio, and whenever this type of things come, that means the profit will be distributed equally among the partners, and that is the reason why all the 3 partners have got 7,000 each. After preparing the profit and loss appropriation account, in this question we have to prepare 2 more accounts. One is the partner's capital account and the second one is the partner's current account. So when we prepare the capital account, we will only record the capital balances and the additional capital done or the capital withdrawn. Here there was additional capital by both the partners. If you remember, that was Y and Z had both introduced additional capital, and all the entries which are there in the profit and loss appropriation account will not be transferred to the capital account. Instead, they will be transferred to another account which will be the current account. Now we'll prepare the capital account and after that we'll prepare the current account. So if you remember that the capital balance on 1st of April 2019, 1st of April 2019, we had a balance, and the balance of X was 3 lakh, of Y was 2,50,000 and Z was 2 lakh. The question also informs us that on 1st of July 2019, 2 partners, that was Y and Z, has further invested 50,000 and 1 lakh respectively. So over here we will enter this in 50,000 and 1 lakh. Now you can see very carefully that the entry at the beginning of the year is by balance 3 lakh, 2 lakh 50,000 and 2 lakh, and 1st of July 2019 for the capital invested by Y and Z 50,000 and 1 lakh. The question has said that their partners have decided to keep their capital fixed. Therefore, we are preparing the capital account first, then we'll move on to the preparation of the current account. So now if we do the totaling of this, and see very carefully, it is 3 lakh for all the 3 partners. Let us come to the debit side, and the last date, that is 31st/3/2020, we will write over here to balance carried down, and in X we write 3 lakh, Y we write 3 lakh, Z we write 3 lakh. This is the balance if you see very carefully, and we obviously have to carry forward the balance on 1st of April 2020, and we'll write over there by balance brought down 3 lakh, 3 lakh. So this is our capital account, which has come to an end by just the transfer entry, and after that we will prepare the current account. After the preparation of the capital account, let us now start with the preparation of the current account, where we'll record all the entries which appeared in the profit and loss appropriation account, as well as the drawings also will be recorded over here. So first let us go to the credit side and start recording the items which appeared in the debit side of the profit and loss appropriation account. We start with the date, that is very important, 31st of March 2020. Please see the format of the capital account and current account is absolutely identical. The columns are date, particulars, and the name of the partners in the debit side and the credit side. So we'll start with the first entry by interest on capital. And if you remember, interest on capital of first partner was 24,000. Second partner was 23,000 and the third partner was 22,000. This was the information. Apart from that, there is a salary which was given to the second partner, and the salary was 18,000. And the share of profit, that is by profit and loss appropriation account, and if you remember, the profit was 21,000, and since no profit sharing ratio was given, the profit will be distributed in equal ratio, 7,000, 7,000, 7,000. This concludes the entries which are there in the debit side of the profit and loss appropriation account. We have transferred these entries in the credit side of the current account. Now let us concentrate on the debit side of the partner's current account. Now first entry first, you can see over here the drawings. So we have drawings. We have been given the date of drawings of X, but we don't have the date of drawings for Y and Z, because Y and Z has drawn on regular intervals. Y has drawn 4,000 rupees at the end of every month. So the total drawings for Y was 40,000 and the total drawings for Z is 40,000. 48,000 for Y, because 4,000 into 12 is 48,000, and for Z it is 4 quarters into 10,000, so 40,000. So now let us start with the drawings. If you remember, the first drawing was made on the 1st of July 2019, and how much was it? 20,000 by X. The second drawing was on 1st January 2020. Again 2 drawings, and the amount is 20,000 again for X. And if you remember, we had drawings of Y 48,000 and Z 40,000. These are the drawings which is given in the question. Apart from that, we have 31st/3/2020, we have to interest on drawings. If you remember, we had calculated 2,400 for the first partner, 2,640 for the second partner, and 1,800 for the third partner. So this basically is all the entries which we have posted. These are the entries which appear in the debit side of the profit and loss appropriation account, and these are the entries which appear in the credit side of the profit and loss appropriation account. This is the entry which has been taken from the from the question. 1st of July 2019, the drawing was 20,000 by X. 1st of January 2020, the drawing was again 20,000 by X. Therefore, the interest on drawing for them was coming to 2,400, 2,640 and 1,800. Now, generally, whenever we prepare a current account, we can have a balance in the debit side or in the credit side. We'll see whichever side is heavier and we'll do the balancing. Over here, if you see over here, we have 24,000 and 7,000, which is just 31,000, which is much lower than what is over here. So the total over here, if you see that for X is coming to how much? 42,400. Okay, the total over here is 42,400. Now, if you see the second partner, we have 23,000 plus 7,000, 30,000. 30,000 plus 18,000 is 48,000, and we already have 48,000 over here, and we have 2,640. Therefore, the balance over there will be 2,640. Let us do the totaling over here. The total over here is 50,640. And the last partner, you can see the total is 41,800, and therefore in all the cases, you can see in all the cases, unlike in case of capital account, here the total of the debit side is heavier than the total of the credit side. So the balance will be over here, and not like capital account, the balance was in the debit side. The balance will now be on the credit side. So what is the date over there? 31st/3/2020. Now, what is the total? 42,400. What is the total over here? 50,640. And what is the total over here? 41,800. Now let us find the balance by balance carried down. So very simple calculation. We have 42,400. From that, if we subtract over here, see very carefully, how much are we having? 31,000. Is it clear? So we are left with 11,400. The balance which we are having is 11,400 for the first partner, which is X. For Y, the calculation is even simpler. You can see over here 48,000 plus 2,640, that is 50,640, and if you add this, it is coming exactly to 48,000. Therefore, the balance over here is 2,640. Repeat again, 2,640. And now if you see over here, we are having a total of 41,800, and we are having a total of 29,000 over here. So 29,000 minus 41,800 gives you a figure of 12,800. Gives you a figure of 12,800. Okay, so I hope this calculation is very clear to everybody. So if you can see over here, 22,000 plus 7,000 is 29,000. 29,000 plus 12,800 gives you how much? 41,800. So this balance will be now brought forward on 1st of April 2020. We'll write over there to balance brought down, and write the figures 11,400, 2,640 and 12,800. I hope you are absolutely clear with the preparation of the current account and the capital account. Here, since we have prepared the capital account and current account, why? Because the capital is fixed. So this sum is a bit different from the previous sums which you have done. We have dealt with the concept of fixed capital. I will come up very soon with new sums on fixed capital so that you are clear with the concept of fixed capital. Keep watching my videos and press the bell icon and share it with all your friends if you like the videos. And also, if you have not yet subscribed my channel, please do subscribe.